Hello everybody and welcome to my monthly Vietnam update. The Vietnamese benchmark index significantly recovered from the sharp correction in April. The VN index surged by 3.8% in US dollar terms to 1,261.72 points. This notable recovery was primarily attributed to a strong performance in the mid-cap sector. Concurrently, the AFC Vietnam Fund also had a positive month, with its NAV increasing by 6.9% according to internal estimates. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel in order not to miss any updates. Thank you. Vietnam is grappling with a deepening leadership crisis as high-ranking officials resign amidst corruption investigations, fueling uncertainty within the Communist Party of Vietnam, or short CPV. The struggle to fill key positions based on political loyalty rather than capability exacerbates the instability, compounded by a shrinking Politburo and impending retirements, posing some political and economic challenges. However, the CPV's robust anti-corruption stance offers a potential silver lining, suggesting improvements in the business environment. Despite these challenges, investors can anticipate relative political stability in the near term as the CPV focuses on preparations for its 14th National Congress in 2026. The resignation of the Vietnamese president and National Assembly chairman in April triggered concerns among foreign investors regarding Vietnam's political stability, resulting in significant sell-offs. Foreigners sold over $126 million in April and intensified their selling in May to around $584 million, or over $1.8 billion within the past 12 months. Indeed, for foreign investors unfamiliar with Vietnamese politics, the abrupt resignation of top officials may prompt concerns and can lead to aggressive selling. However, for Vietnamese citizens, such transactions are perceived as normal and have less impact on the country as a whole. In fact, within the Vietnamese political structure, power is distributed among the Politburo Ministry, comprising 18 members rather than relying on individual leaders. Therefore, changes in top positions like the presidency or chairmanship of the National Assembly do not typically result in policy shifts, especially concerning economic and foreign affairs. Following a months-long vacancy in the presidency, Mr. To Lam, the former Ministry of Public Security, was elected as the new president on the 22nd of May 2024. Similarly, Mr. Tan Tran Man assumed the role of chairman of the Vietnam National Assembly. As analyzed in our previous report, the healthy correction witnessed in April presented an opportunity moment for buying, given the continued improvement in the Vietnamese economy since the first quarter of 2023. The low interest rate environment and supportive government policies have notably bolstered consumptions and exports. May saw exports continue their robust growth trajectory, expanding by 15.8% to reach an accumulated turnover of $156.8 billion in the first 5 months of 2024. Key sectors such as textiles, garments have shown a remarkable recovery, with total export turnover reaching $13.1 billion, a 3.3% slight increase compared to a sharp decrease of 17.8% last year. Notably, companies like Viet Thanh Garment Group, VGG, and TNG experienced exceptional performance, with VGG's net profit soaring by 95% year-on-year in the first quarter of 2024, and driving its stock price up by 11.1%. Similarly, TNG, another garment exporter, witnessed a remarkable 32.3% surge in its stock price. In our portfolio, we maintain a significant weighting of around 40% in consumption-related companies, which we anticipate will continue to recover strongly in 2024 and beyond. Haxaco, HAX, a Mercedes dealer in Vietnam, and Mobile World Group, MWG, are among our key positions. HAX, which we purchased in the third quarter of 2023, and amid its profit downturn, saw its net profit skyrocket more than 40 times in the first quarter in 2024, leading to a 22.2% increase in its stock price in May. MWG, which we acquired during a period of aggressive foreign selling in the last quarter of 2023, witnessed a remarkable recovery, with its net profit surging by 41.9 times in the first quarter of 2024, and its stock price increasing by 15%. This month, export stocks have been bolstered by news that the US is considering upgrading Vietnam to a market economy status, a move that could benefit sectors like shrimp exporters. This potential change stems from improved US-Vietnam relations following President Biden's visit in November 2023. At the recent hearing, the upgrade faced opposition from US steelmakers and shrimp farmers, but found support from retailers, as it would lower anti-dumping duties on Vietnamese imports. The decision, due on 26 of July 2024, hinges on debates over Vietnam's economic reforms and its ties to China, with supporters highlighting Vietnam's market-driven progress, and critics pointed to ongoing labor issues and Chinese influence. Goods from non-market economies face higher tariffs in anti-dumping investigations, using third-country proxy prices to determine fair market value. This year, the US International Trade Commission renewed anti-dumping duties of 25.76% on frozen farmed shrimp from Vietnam, compared to just 5.34% on shrimp from Thailand. If Vietnam's tariff is reduced to Thailand's level, the shrimp export sector will benefit significantly. Minh Phu Group, MPC, Vietnam's largest shrimp exporter and our portfolio's second largest position, will be positively impacted as the US is MPC's second largest market. Also, MPC stocks has underperformed in the first 5 months. We anticipate a strong rebound and positive contributions to our portfolio if the tariff review is favorable. In the first 5 months of 2024, Vietnam completed several highway projects, bringing the total highway network to a new high of 1,892 kilometers. In response to the slow economic growth in 2023, the Vietnamese government initiated a series of infrastructure projects, including airports, ports, power, and especially highways. The significant North-South Highway project is nearing completion, with only a few hundred kilometers remaining. The North-South Highway network, spanning 2,063 kilometers from Lang Son province near the Chinese border to Ca Mau in the southern Vietnam, is one of the country's most critical infrastructure projects. Expected to reduce transportation time of 30 to 40% upon its completion in 2025, this project will significantly boost economic growth from 2026 onwards. Additionally, Vietnam is undertaking other major projects such as the Long Tan International Airport, a $4.7 billion project, Kai Mep Deep Water Port, a $6.7 billion project, Ka Geo International Port, a $4.5 billion project, and O Mon Gas Pipeline, a $7 billion project. About 7 years ago, during our first Vietnam tour for clients, the country had a limited highway network and was considered underdeveloped compared to Thailand. While Thailand has a relatively low highway network lengths compared to Vietnam, Malaysia and Indonesia, its well-built dual carriageway network enhances its connectivity and infrastructure quality. Nevertheless, Vietnam has caught up impressively, rapidly expanding its highway network to nearly 2,000 kilometers in the last decade, surpassing Thailand in total highway length and ranking third in ASEAN behind Indonesia, Malaysia. Vietnam's ambitious goal is to reach 9,000 kilometers by 2030. But Vietnam is rapidly expanding other infrastructure such as ports, airports and railways. Currently, Vietnam operates 9 international airports compared to 36 in Indonesia, 8 in the Philippines, 7 in Thailand and 6 in Malaysia. As a fast-growing export country, Vietnam is focusing on expanding its international port capacity. Currently, Vietnam's total cargo port capacity reaches 658 million tons per year, compared to 1,636 million tons for Indonesia, 628 million tons for Malaysia, and 472 million tons for Thailand. Infrastructure development has been a key driver for Vietnam's economic growth over the past 2 years, particularly as growth slowed. Attracting significant foreign direct investments, or short FDI, in recent decades, Vietnam recognizes the necessity of investing in infrastructure to ensure long-term growth. With aggressive infrastructure investments akin to China's strategy in the 2000s, Vietnam is well positioned to capture substantial economic growth in the coming years. Well, this was all from me. Thank you very much for listening, and you're gonna hear from me again next month with another update. Thank you and goodbye.